Hello, today we are solving October 2021 paper, question number 1, part 1, 2, statement of profit and or loss under the comprehensive income for the year ended 30th April 2021. So let's calculate. So first let's adjust. Okay, we should be able to see what is going to go into the income statement. So let's understand first, write this format. So as soon as you see, so what and all is going to go. First one is, okay, revenue, the revenue. Okay, then any opening inventory, okay, plus purchases, opening inventory plus purchases, okay, plus purchases, and then there is also purchase returns less the purchase returns, okay, and then you have closing inventory, okay. Then you should be able to tell what is the closing inventory. So closing inventory is here, and then you have the, okay, then you have any other income you have to check. We don't know, so we'll just write any other income, and then we have to check for the expenses. So first one is the wages, okay, here wages, and then you can see that there is a cleaning expense, okay, cleaning expense, and then you have the rates, and then you have the electricity and water charges, and then you have the credit card commission paid, which is an expense, and then you have the security maintenance expense. So you have to write all of this first before starting. Okay, now let's start adjusting what is information is given here. So first one is, this represents the closing inventory. Okay, this is going to represent my closing inventory information which is given here. Okay, so this is equal to, so let's write here the closing inventory was 87,500. Okay, so closing inventory was 87,500, and then you have wages owing 600 and electricity, okay, owing 550. So let's adjust the wages. We had seen here 51,500, 51,400. So wages, okay, 51,400 plus 600, so that is equal to 52,000. Okay, so that value is equal to 52,000. So just 52,000, and then you have the electricity owing we can see it is 11,750. Okay, electricity and water charges. So let's write here electricity and water charges. So that is equal to 11,000 11,750, okay, plus what was still owing, it was 550. So let's add up these two values. So that is equal to, okay, that is equal to 11,550 is the water charges, and is there electricity is owing still, and we can also see there is a water charge paid in advance which we have to subtract. So let's adjust that. So minus 900. Okay, so minus 900, so that is also you have to adjust. So 11,750 plus 550 minus 950, okay, 900 prepaid, which has to be subtracted. Any owed expenses you have to add, any prepaid expenses you have to subtract. Okay, so let's calculate this. This will be 11,400, and then you have a full year's depreciation is charged on all non-current assets owed at the end of the year. So now then there is also the rates paid in advance, 2,100. So let's calculate that. Okay, rates paid in advance. So the rates were at around 15,800. So the rates paid in advance. So the rates paid in advance was 15,800. Okay, plus the advance was so you have to subtract here any prepaid, you have to subtract, so minus 2,100. So that value is going to be equal to, it is going to be equal to 15,800 minus 2,100, that is 13,700. So let's write here 13,700. Okay. Now after this, okay, after this let's calculate the depreciation charges. It says that a full year's depreciation is charged on all non-current assets owned at the end of the year as follows. The lease on the premises is for 15 years. An appropriate amount is written off the lease each year. So let's see what is the lease charges. The leasehold of the premises is at 60,000. Okay, and then it says that there is a provision of 42,000. Okay, and this is used for 15 years. So 60,000 divided by 15. So let's calculate here. Okay, so okay, so first one is depreciation. Okay, depreciation of leasehold premises. So that is equal to 60,000. Okay, 60,000 divided by 15 years, that is equal to uh, that is equal to 4,000. Okay, that is equal to 4,000 pounds per year. Then we have the depreciation charge. Okay, so depreciation charge, so that is equal to, so 60,000 divided by 15 years, that is equal to 4,000. Now let's calculate for the security equipment reducing balance method 20 percentage. So let's calculate the depreciation for this. So the total value is 35,000 the cost, and then the provision for depreciation is around 6,000. So depreciation for security equipment, so that is equal to 35,000 minus 6,000. Okay, 6,000 times the rate is 20 percentage. So you should know the formula for calculating depreciation using the reducing balance method. Cost minus, okay, it is nothing but the cost minus the accumulated depreciation, okay, times the rate. So that is equal to 35,000. Okay, 35,000 minus 6,000. Okay, times 0.2. So that is equal to 5,800. So that the value is equal to 5,800. 5,800. And then you have okay, that is 5,800 pounds. And then you have fixtures and fittings. It was 45,000 and the provision was 39,000. Here they are depreciated at the rate of 10% per annum using the straight line method. So let's calculate for the fixtures and fittings the depreciation cost. Okay, so the depreciation for the fixtures and fittings, so fixtures and fittings. So it is equal to, so here it is cost minus, the formula is cost, okay, whatever is the cost times, okay, cost times the rate, so times the rate, so that is equal to, we have fixtures and fittings to be around 45,000, okay, times the rate was 10% per annum, 10 percentage, so that is equal to 4,500 pounds. Now let's write these values for the depreciation here. So the rates are going equal to, first one is the 4,000, and then you have the security equipment, okay, which we had calculated, it is 5,800, 5,800, and then we had, okay, 5,800, so that is and then you have 4,500, so let's add up here, so 4,500, okay, these are the depreciation charges we have calculated. And then you have, on inspecting this books, this I have already accounted, there was an error and this has to be corrected accordingly because there was a trade payable, okay, adjustment had to be made, so I have made the trade payables adjustment. So let's write here, the trade payables is not going to come in the accounting books, it's going in the profit loss, in the profit loss account, it is going to appear in the statement of financial position, and even the bank which is affected here, okay, we have to adjust here. And okay, so and then, so let's fill up the rest of the thing, okay. So now the first one is the revenue, it is around 250,000. So let's write here, the revenue was around 250, 250,000, and then you have the opening inventory, the opening inventory was around 97,000, okay. Opening inventory was 97,000. And then you have the purchases, okay, purchases we can see it is 120, purchases of the inventory was around 120,000. And then you have to subtract the less the purchases, so the purchases returns was around 8,500, so 8,500 you have to subtract. And then you have closing inventory, closing inventory value was around 8,000, so 87,500, okay, we had already returned. Now let's calculate this value to find the cost of sales, okay. So the cost of sales is equal to 97,000 plus 120,000 minus 8,500 minus 87,500. So the cost of sales is going to be equal 1, okay. So the cost of sales is 121,000, okay. This has to be subtracted from the revenue and we will get the gross profit. So the revenue minus the cost of sales will get you the gross profit. So the gross profit value is going to be 250,000 minus 121,000, that is 129,000, okay. So 129,000. Now let's write here. And we did not see any other income, so usually you should also see if there are any other in the business, okay. If it is not there, you will fit here, okay, and just write nothing. Then you have the expenses we have to write. So first one, we had calculated all the depreciation expenses, then we had wages which I have adjusted, then the cleaning expenses, so the cleaning expenses were around 7,100, so let's write here. So the cleaning expenses was 7,100, and then others I have written, okay, the finally credit card commission paid was 3,500, so let's write that also, so 3,500. And then security equipment and maintenance, it was 4,750. So let's write that also. So 4,750. Okay. Now let's add up all the total expenses before finding the profit for the year. Okay. So total expenses. So total expenses is going to be equal to, so the total expenses are, okay, the total expenses value is 106,750. So let's write, okay, the total value, it is 106,750. Now I will have to from the gross profit, okay, from gross profit which I had calculated, and now I'll have to sub gross profit minus the total income to get my profit of the year. Okay, let's write here the 129,000 minus 106. Okay, the gross profit is 129,000, 129,000 minus the 106,750. So that value is going to be equal to 22,250. So 22,250. So this is the profit for the year.